TGIF, everyone. Hello, Alexander, Hugo. How's everyone doing today? Pretty quiet week, but we do have a couple of things that did manifest this week. And I want to start off with, while everyone was writing off Euro Pound, we had a nice little throw over with a 3 drive at the bottom. Here's 1, 2, 3. Here's your throw over line. Failed to get above it once, and then the next time, here we go. It's a nice little reversal week, and with that happening, of course, Euro got back above 50 for a decent week. So I think we have a little reversal week going here too. Not as strong as EG with a nice blue candle there, but this could be the low. We're back above that 17.5 level, and maybe we're going to get surprised and we get a rally, all the way up to 119, 130. Hello, Ryan. How are you? Yen's coming off. All right. I don't know if this is going to be I don't think it's going to be a position short for new lows. I'd look for pullbacks here with yields pulling back a little bit. Look for maybe at the most, I think maybe pull back to 128, this former congestion area, before we get a continuation to the upside. And, S&Ps, what a surprise, making new highs, diverging without NASDAQ. So NASDAQ hasn't made a new high since, I believe this was a high, 51.87, yeah. So S&P, NASDAQ definitely underperforming, and a good reason for that is this, okay? Higher yields do not help the mega cap growth. Okay, so I think that Ryan was long EG. You catch us off this false breakdown, throw under, throw over, throw up, and Aussie trying to bounce back. Gold and silver fighting their way back. Still not sure if this is the low or there'll be better buying opportunities, but if we're peaking in the dollar here, and I don't know how deep it's going to be. If I know some guys are looking for 90, and the big bears are saying we're failing up here and we're headed for new lows to 85. I don't think I'm in that camp. Okay, I'm figuring maybe back to 91.5 or so. Anyway, I'm not even short the dollar here, so that tells you what my conviction level is. Hey, Stell, how are you? Steve?
Hey, Coach.
How are you?
I'm good.
Who's
it's
calling?
Friday.
Oh, yeah, it is.
Yeah, but it's been a very quiet Friday. That's the thing.
Yeah. Well, yeah, I've been a little bit under the weather. My doctor wants me to go get a COVID test. So he actually told me that he was amazed at how many patients he's been seeing that have been fully vaccinated. They're coming in and have COVID.
Yeah, I mean, the vaccination doesn't stop you from having COVID, but it helps you get through it better.
You know what? And I have felt all week, upper respiratory bronchitis type of thing. And I am, I can only imagine what would have happened without any protection. So
yeah, exactly. I mean, I think the chances go lower if you're vaccinated, but it doesn't mean you can't get it. But for me, the main reason why I got it, because I have my parents are relatively elderly, and I don't want to put them in danger. But anyway, yeah, exactly.
Yeah.
But go get the test, man. It's they're cheap now, so might as well.
I mean, I spent. I already pulled an all-nighter this week. I stayed up all night studying for my urine test.
You crack me up, man.
Yeah,
You
we're
crack
pulling
me
all
up.
anyway, so
this reminds me of the joke. Did you used to watch Friends, the series?
yeah, oh yeah.
Chandler made a joke at some point. He goes, "I would love to see a town called Sample." So then the sign says, when you're entering, it goes, "You're in Sample." Anyway, not funny. It was funny when he said it.
Yeah, Chandler was funny. So what are you thinking about the dollar in here, Stel?
There's indecision here. I mean, I am not seeing any real trend, let's say. I mean, equities are going higher. The DAX broke momentarily 16,000 all-time high. US stocks are flat. I think the dollar is just in no man's land until we get to Jackson Hole, and unfortunately, like we said before, we're going from one event to the other, and they're important, like the payrolls, like CPI, and we do get some numbers which are, not exactly as expected, but they're not big enough misses or beats to make a huge difference. And you're going to say, oh, but look at 10-year US, it's back to 137 or whatever it is. It was down to 115 before. Yes, of course it was, but 3 weeks ago or whatever it was here. So if I'm not a day trader, I always tend to take a step back, and for me it's the same thing, and the path of least resistance for the moment is still higher for equities, and this is unless we get a nice curveball by Jay Powell. And, the market is expecting tapering. The question is, A, will we get it? B, what's going to be the extent? And C, is there going to be details? Because they might, move their purchases. They're purchasing a million different things. They might switch the composition of the purchases and also the pace of the purchases. So there's so many moving parts that we need to see the details, and the market is expecting a kind of hawkish tone and tightening, because let's face it, inflation is high, producer costs we saw yesterday are very high, so the market is expecting something to happen. And will they deliver? I think they probably will, but the question is, what are the details? So I'm waiting for that, and until then, I'm afraid to say we're grinding. Unfortunately.
Yeah, what do you think, this low in silver this week? You think it's going to hold, or there's one more flush here?
We're going to wait. I think chances are that we're going to see one more flush. That's what I'm waiting for, and I think we're probably going to get it with Jackson Hole. But it's difficult. It's difficult. We had this. I mean, if you look at the chart of silver, the daily drop of that of Sunday night. Remember that when markets opened and we had the flash crash, it came in exactly to the point. Where's your chart? Yeah, I mean, this was.
That's where I wanted to buy it. If it had traded naturally down there.
Yeah, these lows are actually right on a support trend line. If you go back a few months, it's right on that, and the same with gold. So this I think is going to get tested again. And as Blake correctly said yesterday, there's going to be a lot of stops below 1680 in gold, and 22.30, whatever it was, 22.30 in silver. So if that gets tested, the most likely scenario for me is it gets broken, people get really flushed, and then we reverse higher and don't look back. That's
this would be like almost a classic area, $19. If you see, you had the COVID crash. Before the COVID crash, it was a pivot. And here you have weekly moving averages. Confluence there at around $19.
Yeah, I think $19 would be an absolute gift.
Yeah, it's probably some kind of fib level too. So
yeah,
okay.
And know that down there, pretty much all the longs have been flushed out. Remember this silver squeeze movement that people have been buying physical and the ETFs which are backed by physical, and they were buying when silver was 25.5, 26, 26.5. I mean, they're down quite a bit. So that all these people are going to be looking at this support, and if that breaks, I think it's game over. And then once everybody's out, then the market's free to move higher. That's my view.
Okay, buddy. Who else is here with us today? Steve Volge?
I don't see him. I see Ryan.
Ryan, how are you?
But we can't hear him. He's unmuted, but we can. Oh, mic's not working.
His mic's not working.
It's okay.
Okay.
Hello. How's that?
Hello. Yes, good.
I'm here. Oh, hallelujah.
Oh yeah, it is working.
Ryan.
Okay. How are you, buddy?
Yeah, not too bad, mate. Trying to plug in IT systems and everything. So yeah, all
Okay.
here, all dandy. Not too busy, as I'm sure you're aware.
It's really something that gold has fought its way back all the way to unchanged on the week.
Yeah,
Look at that.
It's
Whereas
one of those things you
silver
don't know what to do
hasn't.
with it, do you? You don't know what to do with it now. It's gone back into the range.
Yeah.
It's you wouldn't say it's completely there yet. If it gets up towards 118 perhaps, then it's turned it around. But it's still looking perhaps dead cattish.
Yeah.
Get above this 58, 60 handle sort of thing, then you may be talking a turn.
Yeah. I'm going to be buying gold. Is it going to be on the breakdown, or is it going to be on a breakout? I don't care. I'm going to be buying eventually, but I'm sitting on my hands at the moment.
There's a lot of hands sitting going on at the moment. I mean, I was looking at the FX vols today, and they're dropping through the floor. With cables under 6%. On I look at the 1 month at the money vols. Euro dollars under 5%. I think dollar yen's under 5% now, and that your level for whether things are volatile or not is up towards 6-7%, and cables sort of been running 6.5, 7.5, 8%. But when you get down into the 5s and 4s, it's not looking good. But that's some markets for you.
By the way,
dangerous.
Go on.
Good morning, guys. I was going to say that's dangerous territory for traders.
Yeah, I was going to mention DSI for volatility is 8, and metals are in the low teens.
Yeah.
So we're getting to extreme levels. Equities high 80s. So we're getting to very extreme levels. They can get extremer, like Blake would say, but we definitely need to watch that.
Well, let's not get too dour about it, because we still get moves. It's just interspersed with periods of quietness. I mean, look at euro dollar. It's just spent 3 days in a 30-40 pip range, and half hour ago it decided it's going to break up through 1750, and who knows? It might head up towards 118. Same with cable. You couldn't buy it this morning. Couldn't find a buyer, and here we are back up 138.25 after dipping under the big figure. So. It's one thing to look at the vols for the general aspect, but there's still moves to be had and hopefully money to be made.
So what are you guys, and I just want to say good morning, guys. What are you looking at going into the end of the week? I mean, it is Friday the 13th, and Friday the 13th is a spooky day for people that
you're just trying to find reasons to be upbeat.
Watch the old 80s movie. Dale, remember when Friday the 13th used to be a thing? Actually, we all do, right? I mean, we all people used to get freaked out about that stuff. But no, jokes aside though, I mean, do you guys have anything on your radar? I mean, I'm looking at the euro dollar, and I think one of the reasons why the euro is pressing above 117.50 is as Ryan just pointed out, we spent a few days between 117 to 117.50, and you're probably getting some shorts at the end of the week, in Europe right now, saying, hey, I'm heading home soon. I'm heading out for the weekend. I don't want to be short anymore. I've been trying. I thought we were going to break 117. You probably get them, closing out some positions right here. That's the only thing I'm really seeing right now. How about you guys?
Yeah, pretty much the same. I think you're right. I mean, we spent the best part of 2 weeks dropping all the way down from 119. So maybe a bit of profit taking coming into the end of the week. I think as usual, we're watching yields, and therefore the majors are following whatever is following yields, which today has been JPY. The yen again, we've seen that sell off in the crosses. That's been a bit of a weight, I think, also behind cables drop and the pound in general, because euro sterling was high up through 85, and euro yen's now making a session high, and guppy, as you like to call it, the pound versus the yen, that's off its lows, pretty similar to cable, but not anywhere near the highs. And I think that's just some relief coming from the crosses, because dollar yen's doing naffle really, and it's looking a bit weak.
Yeah. So, Jane just mentioned that it's a holiday in most of Europe on Monday. I don't see a holiday. Not that there isn't one. I don't see it on my calendar. And since I'm, American, if I can't see it on a calendar, then I don't know what it is. So
I don't see that either. I don't know.
I mean, you guys are the ones in Europe. I mean, right? Well, like, yeah, as long as somebody knows it's a holiday over there, I guess it's all that matters. But, going back to what I was saying about the the currency market, this is a pretty good example, I think, of, everybody was, looking for 117 to see if it'd break, and it didn't. So now we're getting a little bit of a squeeze. We're seeing the dollar, kind of retrace some of its movements, some of the strength that we've seen. But, I look around and I have to point out, like the Aussie, it may be bouncing off of like this, flag support. Same with the sterling, holding the support, which if you guys have been listening here all week, we've been talking about these developments. I mean, we're just holding where we should. And the euro, again, holding that 117's just catching a little bit of people right here, just, squeezing them out a little bit. And Dale, you just pointed out with the gold market, and I know Stelios was just there. You guys were both talking about, we're back above that 1750, which I was looking at the 17. Whoops.
Yeah, we're back to almost unchanged on the week from the bad Friday close.
I was going to get rid of this. This is the 1755 level. We're kind of pressing above there right now. We are, if you guys can't see this right here, I'm going to just highlight it, and let me just delete this for a second. I'll have to come back and put that back. This will be easier to see. This is just so you guys can visually see it. This is the 50% retracement too. That's what was capping. Okay, the entire move here, that little plunge, that 50% retracement, it was capping. So now we're just getting a squeeze above that, because you probably had traders shorting the gold market, up against that 1755 level, saying, okay, well, I'll play on the short side as long as that holds. Same thing with the euro dollar. Hey, as long as we stay below 117.50, I'll play it on the short side. Now you're just getting those positions squeezed out a little bit too. One of the other things I want to point out, and Dale, you'd mentioned this at the very beginning, the euro sterling. This is a nice reversal here from the 127% extension. If you go back and read the basic technical analysis this week, oops, that's what I don't want to do. There we go. The basic technical analysis this week of the euro sterling. Let's start. Here's August 6th, 9th. Okay, the euro sterling is finding support ahead of the last move higher is 127% extension at 84.55 level, and while above this may risk a bounce. So we were looking at this 127% extension. As you can see, the slightly divergent risk of a bounce near current levels at 84.57. We've been anticipating a bounce here, and now the problem that you have with this euro sterling, and I say problem if you're bearish, the problem that you have now is just you're getting a squeeze coming out of a wedge. So if you're wondering, we got the euro dollar that's squeezing higher on the 117.50 handle, or at 117.50, you got the euro sterling that's also pressing higher as well. So, that's kind of like the euro is just being squeezed. I guess I'm trying to point out across the board. You can see the euro
against
Aussie,
everything.
Yeah, euro New Zealand. Yeah, I mean, euro New Zealand. A lot of people probably thought this one was, complete toast as we came through these trend lines. And it's bounced right back to the trend line. So we're seeing a lot of this. Like I said, it's a euro squeeze pretty much universally.
By the way, Blake, there is a holiday, but it's on the Sunday the 15th. We have a holiday here as well, but it's on Sunday, so markets are unaffected in Europe.
Okay.
Actually, right. Spain. Jane is saying Spain has a holiday on Monday, but I don't see any other major markets.
Okay. Spain has a holiday on Monday. Got it. Okay. Cool. All right. Well, as long as you guys know, Sunday for me is beer drinking day. I'm just kidding. I haven't had a beer. I actually haven't had a beer in weeks. I might have to change that after today. After today's price action, thinking about Freddy Krueger and all of his
oh my gosh
stuff going on. Well, like I said, guys, it's pretty quiet. So let me ask you. I'm gonna take us back over to yields really quick. So let's just take a quick view of the 10-year yield here. So we're in the summer doldrums. Stocks are at all-time highs. Yields look like if I was a bond bull or bear, I would be completely stationary right now because you can see yields held support. We bounced here, and so if you look at the 10-year bond market, it rolled over. This is something we've been looking at all week, is actually the 50-day moving average coming back into support, which it has. You can see the last several days it's come back down to support. If you go read the ForexAnalytix analysis, when we failed at the 200-day moving average with the divergent relative strength here, divergent relative strength, divergent price action, we thought we'd come back to the 50-day moving average. We have. So now you're probably, if you're sitting here looking at, the market, it's like, okay, I got caught on the long side up here. Then if you're short, or if you're thinking about being short, you're like, well, I don't know, because we stopped going down. So now that you got the bond market sideways, you've got, the FX market sideways, but stocks are still higher. So you still in the camp that stocks aren't going to come down unless yields start to rally?
Take a guess. Yes, I am.
Okay.
Yeah.
So, if you're in that camp and yields, they're probably stuck. This probably would mean that, equities continue to just
grind higher. Yes.
Yeah.
That's what I think. It's a path of least resistance. Everybody seems to hate this rally, right? Oh, yes. I agree that everything, valuations are way too high compared to historicals, but still the path of least resistance is higher, unfortunately. So I think that we just keep grinding.
So, will we, and I guess this poses another question, and maybe I could ask Ryan here, since we've never talked about this, since he's been part of the ForexAnalytix team. Ryan, this market, the equity markets continue to grind higher. And we've been looking at a target here at 44.95, which is the 161% extension. The last move lower, it's the wedge top, but I don't know, man. Is that going to stop the market? The market looks pretty damn bullish here. Are we going to get could we potentially get a blow off top in this market where we start to see a move that looks something like this? What do you guys think?
Yeah, I think we're just looking at the chart, and I threw it up in the room yesterday, just, no text on it at all by the moving averages. And if you look at the last, year or so, we've had little blow-offs or little blowouts rather, where the price has dropped every sort of couple of months. I think we're potentially heading to one of those. So I wouldn't be surprised if we find ourselves dipping by 100, 150 points, which in the scale of the trend, as you can see there, is just a natural refresh. Regarding whether stocks are going to actually, have a blow higher and then, collapse down on yields, I'm not too sure. A lot of people are still looking at the taper like it's going to be a big deal. It's not. We've been there before. The whole world and his mate is expecting it. If stocks dump off on that, they deserve everything they get, and anyone who's long into that needs to just hold on and buy the dip, as they say. Because look, if you look back in history, look back at after we came out of the GFC, the global financial crisis.
Oh yeah,
everyone was going taper. Right, well, stocks all dump off. Yeah, we had the big taper tantrum.
That would be back.
How long did that last?
Yep.
The relative 5 minutes it lasted, and then we made new highs. When the Fed raised in was it 2015 the taper? tantrum.
Oh, you're talking about over here, this little taper tantrum.
Yeah. So that's the taper tantrum there, and look at it now. So even with yields climbing higher, you always get the thing where, okay, the Fed may be taking the punch bowl away with stopping QE, but they only do that if the economy is doing well. And if the economy is doing well, that's good for stocks. So
basically, there's no scenario which is bad for stocks.
There's no scenario that's bad for stocks. But obviously, there's a caveat to that. You're getting back to normality where stocks will start to move again on the fundamentals, month to month, and some reality, no doubt, will come into stocks. So maybe we'll get the QE reduction. If the Fed pull the trigger and it's a big cut in QE, a hawkish cut in QE, 20 billion, 25 billion a month, that might be the time you get the stock wobble. But then, if you get anywhere down sort of 8-10% correction, what are you going to do? You're going to step in and buy the dip.
Yeah, I was going to try to find, this, here we go. Let's see. All my charts of the day just keep popping up. I want to, these are my articles at Trader Summit, but I was going to pull up this article that I did months and months ago about.
Just search for the word grind. I think Blake and you, it was like the grind or something, wasn't it? Hold on, let me find it. Grind.
No, yeah, it was.
No,
it was
slow grind. What was it? I can't remember. Slow. No.
Yeah.
Anyway,
I put about a blow off. Oh, didn't I put blow off top? No, didn't.
The grind into a parabolic trend. I got it. Let me put that into the chat box here.
Parabolic. That's
parabolic trend. There you go.
Oh, did I?
I put it here on the chat box. You can find it.
Okay, thanks. So this was 3 months ago, and the S&P looking for this grind higher in the S&P to a parabolic trend, and it feels like to me that that's what's going to happen. It's just there's like at this stage in the game, there's no reason to be on the short side. So if there's no reason to be on the short side, and what I continuously hope that will happen is you get traders that will step in on the short side, and you want them pressing a little bit, because if they can press short and find out that they're wrong, they have to turn around and cover, right? That type of acceleration is what really picks up the trend into a blow off top. And I'm just kind of hoping that we, grind and then finally just blow off. It'd be so relieving to me. I would be so happy about that. But I've been hoping for that for a long time. The fact of the matter is, if you remember, like our analysis from a couple of years ago, prior to the COVID, no one expected COVID, right? I mean, the most I expected COVID was, in January of 2020. I'm like, well, that virus in China doesn't look very good. I have a feeling it's going to make its way over here. So I think even on this webinar, I told you guys that we went to Costco, bought a bunch of rice and stuff like that. I'm like, we might have a food shortage. So my wife and I were a good month ahead of the curve, and which is good at the time. But at the time when the stock market was at 3,300, I was also hoping for a blow off top. Obviously, because of COVID and the reversal we saw for a good 4 weeks, and because of what the Fed's done, they've completely derailed what was probably going to happen a year and a half ago. So now here we are, fast forward, a year and a half later, and now we're stuck in that same situation where we're probably going to continue to grind up, and we are going to have a blow off top at some point. It got prolonged by the Fed because of the actions that the Fed took. And not only the Fed, but the central banks globally. So go ahead.
Sorry, I'd point to the trend. If you can just zoom in on the last year or so, when you're looking at trends, you want to see two things. If you get a trend that goes parabolic, then you're heading for a top, because nothing goes up in a straight line without reversal. But all along that trend there, you've had corrections, and corrections is the most healthiest thing you can have in a trend. Yep. So we've gone quite a long way, and if I'm just doing it on simple basic, every couple of months, a month, 2 months, you get a correction. So on that basis, one might be due. Now, whether that comes from, like you say, a blow off first, which then drops 5-6%, and that's the correction, or whether it corrects first, it's difficult to assume. But one thing I've thrown in the mix, a lot of the blame behind stocks has been the Robin Hood crowd and people putting their stimulus check money into stocks and stuff like that. What happens in September when the finishes?
I'm sorry, you were breaking up, Ryan. You said
again.
You were breaking up there.
Yeah, what happens in September? This rally's been half blamed on the Robin Hood crowd. Yeah. What happens when all the job support finishes and people are then maybe not getting back into work? What happens to the stock rally then and all those holdings?
Yeah, I mean that's the thing is people are. I lived through, and I know you guys did too. I'm going to rewind really quick, and I'm going to take you back to 1996. It was 1996. I was 20, 5-year-old, new. It was the end of 96, actually, November. I stepped on a block trading floor, mid 20s, had an investor, started trading, day trading, right? By 1998, I was driving a 911 Cabriolet. I had more money than I knew what to do with because I was trading during the .com bubble, right? I was long GoToNet, a bunch of GoToNet, just like somebody today would be long a bunch of Ethereum or Bitcoin or, Amazon, I don't, whatever. And I had no idea what the hell I was doing. I mean, I learned a lot of my technical analysis those years through, some one-on-one coaching with some folks. But I was also in my mid 20s, and what we didn't see coming is the big .com blow up rather. And so, I'm here to tell the story as I lived through the story, and I continue to trade, but so many people didn't. And it's everybody is, if they have a job, they go back and they get a job, as Ryan was pointing out, and then they're trading the markets and they make they make a lot of money. And let's say, it's kind of inconsistent, but they're going to continue to trade, even if it's, because of technology today, they have the ability to continue to trade on their phones, even if they're working jobs. They can still do that. But I think it's gotta come to a head at some point where, making money just isn't about just getting long something and by the end of the day selling it and, cashing out and making some profit. That dynamic will change. And when it does, it's gonna hit the market in a big way. And we've been through it. I know Dale, Stelios, and Ryan, and Steve, I know, is traveling today, and he's a little bit younger than us. But, for the four of us that are on this webinar right now, we've been through it and we've seen it. So, and we're here to tell the story, right?
Yeah.
So anyway, cool. All right. Well, hey, so Steve's not going to be here today. Dale, you don't have any interviews today, right? It's Friday.
He said he's going to be off for 5 minutes. Maybe he's off already. Okay. Well, we're going to
have
down
the pub.
We're going to.
He's like, I'm out of here.
Yeah, that's it. Friday. I'm gone.
Yeah. Hopefully he didn't.
I'm sorry. I didn't know I had myself muted.
Oh, okay. So
all right.
That's happened to me many a times, Dale. That's So anyway, we don't have any. You don't have an interview today, right?
No, not today.
All right. Well, then I want to say that if you guys have been, look, let me just thank you guys for always supporting us and being around. I want to say if you guys were out there looking for our our specials, they have been removed. The buy 1 month get 1 month free. We had done that to celebrate the marriage of Forex Flow Live, which Ryan and his team, and then the ForexAnalytix team. Look, if you guys still want to find or get a good deal, make sure you reach out to Ryan. Ryan is Forex Flow Live. That's and you can find him on Twitter here. You can contact him right here on Forex Flow Live. Contact Ryan and he'll give you a special discount if you want to get a discounted amount. If you're like, shoot, I just missed it. Blake had been talking about it all week, and we removed that. So if you want to try to get a discount, reach out to Ryan himself. And you can. Other than that, I want to say thank you guys so much for being here every day with us. I hope you guys are enjoying the analysis. I know it's summer sucks for trading, but you know what? We try to make it as fun as possible for you guys.
Yeah. I heard it cooled off a little bit in Phoenix, unusually.
It's muggy, nasty here. I feel like I live in South Florida right now, honestly. It's gross. It's gross.
Put your mosquito netting on. Yeah. Okay. Well, I want to thank the team for laying it all out on the court, leaving it out there, trying to help you guys succeed, rooting for you, supporting you guys. And if you feel like we are doing that, the way to support us is to take a subscription on and hang out with us more than just in face. And Friday's a great day to do it because you have all weekend to familiarize yourself. And who knows, things could pick up in August. For sure they will after everyone gets back from the Hamptons after Labor Day. So get ready I think we're going to have a pretty wild fall. So,
I agree.
So, get your war chest ready and let us trade with us this fall and see what your performance is. Give us a quarter.
I was going to say, Dale, I want to say one last thing before everybody, signs off with you. One of the things I told everybody on our private Morning Edge webinars and daily roundup webinars yesterday, I want to reiterate this to you guys that don't have the ability to listen into those, because in 45 minutes or an hour, actually, I'll be meeting up, or however, I have to look at the clock. Anyway, here shortly, I'll be with the ForexAnalytix members. But what I've told everybody is this is a quiet market. In a quiet market, the last thing you want to do is get yourself into trouble, because it's hard to dig yourself out of holes when there's very low volatility, as Ryan pointed out earlier. So whenever you trade, just know what your risk is. Don't ever let it surpass that. So if you get long, whatever you get long, or you get short something, just if whatever you do, put in your stops and hang and if you get stopped out, you get stopped out. Don't dig a hole too deep, because when there's low volatility, it's hard to dig yourself back out. Okay, I had to say that piece. Sorry, Dale.
Well, that's okay. And don't just count your pips, count your blessings. All you have to do is look around, and it could be your friend, it could be your family. You know what? You're blessed if you have money to trade with. So think about that, and everyone have a great weekend.
Yeah, and big thanks to you, Coach, for leading all the webinars and leading the charge for all us lot, steering the Warriors, as you call them.
Yeah. All right. Well, the best
Thanks,
team
Dale.
on the net. We're the best team on the net. Got better with Ryan joining us. So, I think, and when you do join, don't just join for a month. If you hired a money manager or took a service, you really can't make a good judgment unless you're there for at least a quarter. All right. 3 months. I mean, everyone could have a bad week or two. How can you tell if anything's good in a month?
Yeah.
So
speak up too. Speak up.
Yeah.
Ask questions.
Yeah.
Find out what you want to find out. We're all here. We're all open.
Yeah. You need help. Ask for it. Don't be, don't be embarrassed. Be embarrassed if you're afraid to ask for help. Anyway, that's the end of my homily. Go in peace and,
Cheers,
and serve
guys.
yourself. So anyway, have a great weekend, everyone. Love you
Yeah, no problem.
guys.
Cheers, guys.
Take it easy. Adios. Should I end it? Or Blake's got it? Let's see. Maybe I could end it.
I can't end it. You got to end it.
Okay, I can end. I'm ending it.
All right.
All right, like so show the outer limits. I've now taken control of the webinar. And now it's going to end for everybody. Bye.